While everyone else was screaming crash and bankruptcy risk at 258, I told you to load the boat. And now, Rezolve AI just exploded exactly as predicted, with Wall Street's biggest players quietly accumulating 480% more shares. Let me show you what I saw that they didn't. Welcome back to Smart Stock Sam, where we cut through the noise and follow the smart money. I'm Sam, and if you're new here, this channel is built on one principle. Institutional footprints don't lie. Today's analysis is special because we're going to dissect one of the most perfect setups I've ever called, break down why it worked, and more importantly, show you why this is still just getting started. And if you haven't already, smash that subscribe button because this is exactly the kind of edge you need in this market. Let's rewind to February 2nd, 2026. Rezolve AI had just crashed nearly 10% in a single session, down to $2.58. The headlines? Absolutely brutal. Bear research groups like Grizzly were publishing hit pieces. Reddit was filled with panic sellers. The sentiment? I called it absolute terror. But here's what I showed you in that video. While retail was running for the exits, I pulled up the institutional ownership data. And what did we find? BlackRock, Citadel, Susquehanna. These aren't your average hedge funds. These are the smart money machines that move markets, and they weren't selling, they were loading up. Institutional ownership had surged 480%, not 48%, 480. I asked a simple question in that video. Why would the smartest money in the world be accumulating a bankruptcy risk? They wouldn't, because Rezolve wasn't a bankruptcy risk. They had just closed a $250 million oversubscribed financing round. That's not desperation money, that's expansion capital. But the fundamentals were only half the story. The technical setup, that's where this got nuclear. On February 4th, 2026, I published a follow-up breaking down what I called the technical pressure cooker. The data was insane. 53% short interest, only 1.2 days to cover. A massive wall of 350 strike call options expiring mid-February. I said it in that video. This is a tiny exit door for a massive crowd of shorts. And when they panic, that's not a rally. That's a violent upward explosion. I identified critical support at 250 to 254. I said if that holds, we were going to see a massive reversal candle. And what happened? February 6th, 2026. The stock opened weak, dipping all the way down to $2.25. Bears were celebrating, retail was shaking out. And then, boom, a massive green candle erupts. Volume floods in. The stock rips 15.33% in a single session, closing at 266. That support zone I identified, it held perfectly. The bulls defended it, the shorts got trapped, and the wealth transfer I predicted, it's happening in real time. This wasn't luck, this was reading the game. Now here's the most important part. This rally is not over. Let me walk you through why Wall Street is still buying and why you should be paying very close attention. Number 1, valuation is still ridiculously low. Rezolve is trading at 1.8 times projected revenue, the AI infrastructure industry standard, 5 to 8 times forward sales. Do the math. Even at a conservative 5 times multiple, this stock could triple from here just on a sector re-rating, and we haven't even talked about execution yet. Number 2, profitability is here. December marked their first month of operational profitability. That's massive. They're proving the unit economics work before deploying their new $250 million war chest. They're sitting on $209 million in contracted revenue for 2026, and they're targeting $500 million in annual recurring revenue by year end. That's not a pipe dream, that's a guided roadmap. Number 3, strategic validation from the biggest players. This isn't some speculative startup. Rezolve is a featured strategic partner on the Microsoft Azure marketplace. They're validated by Google Cloud. They have direct distribution to thousands of enterprise clients. And the Tether Alliance? That lets them process crypto to fiat transactions with zero banking fees. That's a competitive moat in a trillion-dollar payments revolution. Number 4, the market opportunity is absolutely massive. Their agentic checkout technology sits at the center of a market projected to hit $1 to $5 trillion by 2030. We're talking about AI-powered commerce infrastructure. This isn't a nice-to-have. This is the future of retail. So, what's the upside from here? Let me give you the targets I'm watching. Short-term technical target, $4. If bulls continue to hold support and the short squeeze accelerates, $4 is the next major resistance. That's a 50% move from current levels. Medium-term re-rating target, $7 to $12. If, and I believe when, the market re-rates Rezolve to industry-standard multiples of 5 to 8 times sales, we're looking at a potential triple to quadruple from these levels. Upcoming catalysts to watch: Q2 2026 American market rollout, Q3 2026 European expansion, and February gamma squeeze potential. Those 350 call options I mentioned could trigger another explosive move if they expire in the money. This is a multi-stage rocket. Look, I don't make these calls to brag. I make them to show you how to think like institutional money. When retail panics, Wall Street accumulates. When headlines scream fear, smart money sees opportunity. And when technical setups align with fundamental catalysts, that's when fortunes are made. Rezolve AI was a textbook example. And the playbook? It's still unfolding. If this breakdown added value, drop a like. If you want more calls like this before they explode, hit subscribe and turn on notifications. And drop a comment below. Are you in Rezolve? What's your price target? Let's talk strategy. As always, this is not financial advice. Do your own research, manage your risk. But if you've been following this channel, you know we don't chase hype, we follow the smart money. I'm Smart Stock Sam. Thanks for watching, and I'll see you in the next one.